Hello and welcome to another session of the My Solo 401k Financial, My Community Daily Webinar Series. Thank you so much for joining. We're about to get started. We brought some content we want to go over, but of course, if you have questions or topics that you wish to discuss, please don't hesitate to chat those over. Just want to verify that the audio is working. One second. So yes, the presentation, as always, is being provided for educational purposes only and should not be construed as tax, legal, or investment advice, nor as a solicitation. When making an investment decision, please consult with your tax attorney and financial professional. All right, so please also subscribe to the YouTube channel as we go live twice a day with these live Q&A sessions. We go live once in the morning at 10 a.m. Pacific, 1 p.m. Eastern, then we're back in the afternoon at 1 p.m. Pacific, 4 p.m. Eastern. And if you subscribe, you'll not only get the notifications, subscribe to the notifications bell, you can jump into a live session, ask questions, hear what other people are asking about. You'll also get notifications of all the deep dive content that we host. For example, we're in the middle of contribution seasons where many people are making contributions, for example, for 2024. Although, because you can do that if you set up the plan. If you signed up with us last year, then you would have preserved the ability to contribute all the way up until your business tax return deadline, including any time you filed extension here in 2025. So many folks are still making contributions for 2024 here in 2025. So as a result, we've been hosting a series of deep dive sessions focused on everything A to Z around making contributions. Now we've organized that around how the business is taxed. For example, we hosted one regarding or for businesses taxed as an S Corp or a C Corp. Last week, we hosted a session focused on businesses taxed as a sole prop or a single member LLC. Tomorrow, we'll be back in the afternoon with a deep dive session focused on multi-member LLCs. Now, even if you have a different type of business, you're welcome to join and we can field questions around that. A lot of the concepts will still apply. Then looking forward, we're going to be having more sessions, for example, focused around mega backdoor Roth, everything there is to know, A to Z, contribution guides. On top of that, we're going to have strategy sessions around the magic number. In other words, how much income you need to be able to maximize contributions, whether you're trying to maximize in terms of pre-tax versus maximize in terms of Roth, or maybe you want to do a mixture. So there's a ton to learn. There's a lot of great educational content on the horizon. So please subscribe, to get all the notifications. And also you can just come every day and just hear what we're talking about, because we do bring content. Like today, we want to talk about a common point of confusion, which is how to have Roth and or mega backdoor Roth solo 401k plans at Fidelity. So how to unlock that, because what is confusing is that Fidelity offers their own solo 401k plan, which is a very vanilla basic plan, which is not going to allow for Roth or mega backdoor Roth contributions. Whereas our plan allows for all of the above, plus in-plan Roth conversions, where you move money that's in a pre-tax status over to the Roth. So on top of that, you can still have your accounts at Fidelity. So it's an unlock, right? It's a way to have your accounts at Fidelity, but have all the service and features that our plan offers, like the ability to make Roth and make a backdoor Roth contributions. And I see that we got some questions being chatted up. That's great. Thank you for bringing the questions. We'll turn to that here in a moment. We want to go through some of these slides. Thank you. So before we turn to some of the questions, and if you have more questions, of course, please don't hesitate to chat it up. But we always like to lay the foundation with, okay, basics, solo 401k eligibility. So in order to be eligible to set up a plan, you need to be self-employed with no non-owner, non-spouse, full-time W-2 employees working for any business owned by you or a spouse, if any. So the key is that you're self-employed. And again, no non-owner, non-spouse, full-time W-2 employees working for any business owned by the individual or a spouse, if any. Now, some of the top eligibility considerations are going to be, okay, do I need a formal legal entity? The answer is no. We have many individuals who operate, for example, as sole proprietors. The key requirement is that you report earned self-employment income. Okay, well, what is earned self-employment income? If you are taxed as a sole prop, that's going to be income reported on Schedule C of your 1040. If your business is taxed as an S Corp, for example, or a C Corp, it's going to be income reported on a W-2 that you receive from your business taxed as an S Corp or a C Corp. There's no minimum amount of earned self-employment income that you need to report in order to be eligible to set up a plan. Your spouse or business partner can participate as long as your spouse or business partner are reporting their own earned self-employment income, such as their own Schedule C or their own W-2 from the self-employed business. You can set up a solo 401k even if you have a W-2 day job, even if you participate in your W-2 employer-sponsored plan, as long as you've got that separate earned self-employment income. So again, if you have questions or topics to discuss, please don't hesitate to chat that over. So I want to jump ahead to our discussion around having the account at Fidelity. So I think it's helpful to first start out with the understanding that a solo 401k is a legal entity. It's a retirement trust. So like any legal entity, it's the documents that create it. So when customers set up a solo 401k plan with us, we prepare the documents within the same business day, which creates the solo 401k plan for their business. And then they can use those documents to open up accounts at the bank or brokerage of choice. Now, we're very hands-on in helping our customers open up the accounts. For example, preparing the transfer paperwork, et cetera, or I should say preparing the account opening paperwork, for example. So the top brokerage option for our customers is Fidelity. So it's definitely a myth to say that you can't have a Roth solo 401k at Fidelity or a mega backdoor Roth solo 401k at Fidelity. You can't use Fidelity's solo 401k documents because their basic plan doesn't allow it. But we've helped customers, thousands and thousands of customers, open up accounts at Fidelity. So Fidelity's happy to open up brokerage accounts for third-party plans. Now, Fidelity is the top brokerage option with our customer base. Part of that is because, of course, their name, right? Or customers may already have accounts there. But part of it's also, I would say, because they have a very streamlined process. So unlike the second most popular option, which is Schwab, which still has a paper process, Fidelity now has an online process. So it's much more streamlined. It's easier. It's faster to open up the accounts. So it's an online process. Moreover, Fidelity has the most options when it comes to funding the account. For example, they have payroll integrations. They allow for electronic transfer, etc. So those would be some of the top reasons that customers would want to go with Fidelity. But that really unlocks that for customers that might be confused, thinking that they're reading that Fidelity doesn't support Roth solo 401k or mega backdoor Roth solo 401k. You can do it. We've helped thousands of people do it. You have to have the plan with us, sign up with us, and then we'll help you open up those accounts at Fidelity. It's going to be, if you're going to have multiple types of money, such as pre-tax Roth and mega backdoor Roth, you need to have separate accounts. So we help our customers with the requisite number of accounts. We're fielding questions every day from customers, educating them on the contribution rules. We provide all the compliance support. For example, if someone is making mega backdoor Roth contributions, a 1099-R has to be issued. We handle that as an optional free service for our customers. So we're super compatible with Fidelity. And again, help thousands and thousands of customers open up accounts at Fidelity. So hopefully that helps shed light and kind of burst that myth that you can't have a solo 401k at Fidelity that has Roth funds. Okay, so now let's go to the questions that are being chatted up. Thank you so much for bringing the questions. And if others have questions, please don't hesitate to chat those over. We've got plenty of time to go through it. If you're on YouTube, please subscribe. You'll get all the notifications of when we go live, which is twice a day. And also, I should mention, we have a community of over 30,000 members with forums that are posting questions 24/7. So there's lots of great ways to learn, to ask questions, to hear what other folks are asking, just to get engaged. So please don't hesitate to do so. So I have a Roth individual 401k with E-Trade for self-employed individuals, similar to your solo 401k, except for E-Trade does not allow the mega backdoor Roth feature. That's right. None of the discount brokerages do. Many of them don't even allow for Roth, but even those that do allow for Roth, it's very limited, right? They're not going to allow for the mega backdoor Roth. They're typically not going to allow for the in-plan Roth conversion. Last year, I asked E-Trade to liquidate the Roth 401k money. I requested that they code the withdrawal as a transfer and asked them not to withhold taxes on the distribution. They sent me a check that I deposited into my solo 401k Roth that you opened at Fidelity. The issue is that E-Trade coded it as a distribution, not a transfer, and they withheld income taxes from the payment and issued a 1099. I called E-Trade and they said there's nothing they can do. I'm 62 years old. How do I correct this? So if E-Trade's not going to cooperate, number one, if they're reporting it as a taxable distribution, then the only recourse there, if the funds were deposited within 60 days of being distributed by E-Trade, if they were deposited into the new account, the new Roth account for the solo 401k, is to work with the tax advisor to report it as an indirect rollover so that the IRS understands that it wasn't a taxable distribution. And then effectively, you would have to claim that refund. So if E-Trade withheld 20% and sent it to the IRS, to Uncle Sam, now as if you were going to take a taxable distribution, right, and therefore have income tax liability. Since there's no income tax liability, it's certainly possible that the individual might have ended up overpaying their taxes and then they'd effectively be due a refund. So by reporting that as an indirect rollover, now that amount won't be reported as taxable income. So the end result is the person might end up overpaying their taxes and then would be due a refund. But that's really the only course, which is understandable because I'm sure the money's gone, right? E-Trade sent it to the IRS. So, and they're probably, a lot of times these brokerages are loath to correct. They don't cooperate sometimes when it comes to trying to get them to correct the 1099. So then in that case, the next step is to, again, report it as an indirect rollover. So work with your tax advisor to report it as an indirect rollover on the 1040. So effectively, you'd be telling the IRS, no, I know this looks like a taxable distribution because you got this 1099 from E-Trade, but really it was deposited into a retirement account within 60 days. Therefore, my income didn't increase. Therefore, I may have ended up overpaying taxes because of the withholding, right? So, because you'd also work with your tax advisor to claim the withholding amount. So that could end up resulting in a refund being due, depending on your overall tax situation. Hopefully that sheds light and helps. Thank you for bringing the good question and scenario. All right, we'll give it a moment just to highlight again. Please subscribe. We'll be back tomorrow with tremendous deep dive content. We'll be back in the afternoon with our deep dive session focused on businesses taxed as a multi-member LLC or a partnership, talking about 2024 and 2025 contributions A to Z. We'll also have, of course, have our morning session. So the morning session is at 10 a.m. Pacific, 1 p.m. Eastern. In the morning session, we'll be here to discuss, definitely considerations that when it comes to opening up a solo 401k. So don't set up your solo 401k until you watch this. And then again in the afternoon at 1 p.m. Pacific, 4 p.m. Eastern, our 2024 and 2025 deep dive solo 401k contribution guide. All right. Well, thank you so much, everyone. We appreciate the chance to discuss these topics. Please continue to engage. Until next time.